Good evening, guys. You can see time is around 11:11. Let's look at today's Nifty 50 as well as Bank Nifty trade analysis. You can see yesterday the market gapped down and moved in a sideways man. But today you can see the market actually gapped up and rallied towards the upside, even breaking this 200 moving average towards the upside. You can see clearly the price took support from this yesterday's close and rallied all the way towards the upside, breaking the first candle's high as well. And you can see another break of structure here, clearly breaking market towards the upside. You can see the break of structure here. And if you try to plot the demand over here, the last down candle, you can see this is a demand candle. And once if this is mitigated, it doesn't hold any value. And you can see here is where the market continued further selling. This is the 1 minute order block, guys. And you can see the market again rallied here. Couldn't cross this 21 moving average. The red color line here is the 21 moving average where price couldn't cross the 21 moving average. Price took support here and continued rally towards the upside. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 100% move here or the 1.68%. You can see the market came all the way to this zone here. Look at this, guys. This is the 1.68 level where the market came all the way, or you could have targeted the 100% move. You can see clearly the market again retraced to 21 moving average, again rallied upwards but couldn't cross this high and clearly broke downwards but couldn't cross this low also, was moving in a sideways manner. But you can see this kind of momentum which actually closed or broke this low, guys. You can see clearly the market broke this structure towards the downside, forming a chalk. And you can see after this the market retraced towards this zone here. So if you consider this high to low of this candle, you can see this is the 50 level, and you could have expected price rejecting from 50 levels and rallying towards the downside. So in case if you try to plot the fib extension, the market would rally here and continue further selling towards the downside. That's how you could have expected. But if you try to plot the common point between this to the common point between this to the common point between this, you can see the market here need to retrace, but you can see here the market after this kind of candle, the market try to head towards the upside. But what you need to remember here is that these three candles, guys, which actually broke this structure, which were very gaps here, and you can see the market retraced, very balanced move, and you could have expected huge downward momentum from here. But what happened is the market reversed and even broke this high, forming a chalk here. So this is a trap, guys, for sellers who might have entered here. So this is a very crucial candle. After this candle, you can see the market didn't even break this low as well. Instead of that, the market retraced and tried to head towards the upside. So you can see after this, the market clearly changed the market sentiment from being bearish to bullish again, forming a chalk here. So in case after that chalk formation, the market broke this high with three candles, as these three candles which broke this low. And if you try to plot the fib levels, the common point reduced to the common point different gap, you can see you could have plot the fib levels here. This is the 50 level. And for better confluence, you could have also put the anchor gap level. This is the low. And you can see the price taking support from here. So if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you can see you could have targeted the 100% move, or you could have targeted the midway between the 100% move and this 1.68% move. This is the 0.5, guys, the midway. In case if you might have seen my old videos, this is how I usually trade. This is the midway, guys, the 0.5 as well as the 0.6 level. You can see both the 1.68 level and the 0.5, 0.6 level are both in confluence here. And this is where the market actually retraced and continued further selling. Here also the same trap here, guys. Here where the market sentiment retraced to 50 levels of this swing move and should have continued further towards the downside like this. The same pattern has repeated towards the upside as well, where the market broke this high, even breaking this high. After this retracement here, the market would have continued further buying pressure. This is how usually the market will be here. in case if the market sentiment would have been bullish. But what happened is that after this consolidation of price taking support from this 9 moving average, you could have tried your stop loss all the way till here. Once if this low is been broken, and you can see clearly the market faced rejection from these higher levels and continued further selling towards the downside and broke this low with fair value gaps and very huge impulsive candles, and it formed a chalk as well. You can see a clear chalk formation. In case if this momentum was not there also, you could have expected this low also. You can see when this low is being broken as well, clearly changing the market sentiment from here being bullish to bearish, and here from bearish to bullish. This momentum was just to trap all those sellers who might have entered here, guys. And you can see further the market tried to head towards the downside. So in case if you try to plot Janka gap levels here, you can see the market rejecting levels of here where price took support here, and here it faced some sort of rejection or resistance you can call. Or if you consider this swing momentum, guys, the common point between this to the common point between this, you can see the market retraced all the way to one point, the 0.38 level here. This is where the market faced some sort of rejection. Or you could have even considered this candle, guys, the last up candle over here. This candle which actually broke this low also. You can consider this to be a order block or a supply zone. Here is where the market faced rejection, the 0.38 level, and continued further selling towards the downside. So if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move. You can see how the market clearly came all the way to this low. This is the 100% move, guys. And the next target you could have targeted all the way to 1.68 level. Here you can see how the market came all the way here to the 1.68 level. So you could have targeted this zone as well. And you can see here this is the day's pivot levels, guys, where the price took support. You can expect some kind of reaction from here. And you can consider this order block level, which this is a 1 minute order block, guys. Here. The last down candle. You can consider this to be a 1 minute order block, and you can see price retracing all the way towards the upside to this fair value gaps. So in case if you try to plot the fib levels here, the common point between this to the common point between this, you can see this 0.23 levels, guys. Here is where the market faced rejection over here. This is the 0.23 level where the market rallied all the way towards the upside. In case if you can see, if you try to plot the fib levels here, the common point between this to the common point between this, the price took support somewhere here and trying to move towards the upside. But here it faced rejection from the 0.2 levels, and you can see clearly the market tried to head down, but failed to break a lower low here, clearly showing some kind of demand over here and the price rallying towards the upside. And you can see the market clearly broke even this high, forming a chalk, or even this high also, clearing, even breaking this order block level. And you can see the swing momentum which even broke this high also. So and the market retraced, and you can see again the market took support from this 5 minute zone as well as breaking this 200 moving average towards the upside. So in case if you try to plot the fib levels here, the common point in this to the common point in this, you can see price taking support from the 0.38 level here. The 0.38 level is where the market faced rejection here, and the same support here where the market took support from this 0.38 level. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you can see the market didn't reach the 100% move. Instead, it went all the way to 0.78%. Or you can see this is the initial retracement of what the market took place, guys. So in case if you try to plot this retracement where the market clearly broke this chart, so if you try to plot the fib extinction levels, the common point in this to the common point in this to the common point in this, you can see the market came all the way to 1.68 level, or you can see the midway between the 1.6 as well as the 2.68 level. Look at this, guys. The market came all the way towards the mid of the 1.6. This is the 0.5 levels, or the 1.6 to the 2.6 in the mid of that zone. This is where you could have targeted. This is where you could have targeted your positions. After this candle, you can see a huge bearish engulfing candle. So once if this level was being broken, guys, towards the downside, towards the upside, you could have entered somewhere here, or after this kind of consolidation where price is trading above the 9/21 moving average. Or once if this swing is fib levels has been broken, if you consider this swing here, once this swing fib levels is being broken towards the upside, you could have entered long position, expecting the market to go further towards the upside. And here is where the market faced rejection, found a bearish engulfing candle, and continued further selling towards the downside. So if you consider this momentum, guys, you can see if you try to plot this low to this high over here, the common point within this, you can see another the 2.36 level here where price is facing rejection. You can see here 2.3 levels where price face rejection, and you can see further continuation even after this huge impulsive momentum. You can see this 2.3 level price getting rejected. So the first long position is here itself. Because after this break of structure, the market came here. Once if this levels was being broken, you could have entered long position here, keeping your stop loss just below this order block level and targeting all the way to 100% or the 1.68 level. This is the one target where you could have taken. Another long position is here, guys, keeping your stop loss just below this candle and targeting the 1.68 level. And after this huge momentum towards the downside, if I were there in trade, I would have taken short position here itself, guys. But for you, for better confluences, you could have taken keeping your stop loss just below this high of this candle and targeting all the way to 1.68 level here. This is where you could have targeted the third position. This price rejecting from these levels is where you could have kept your stop loss just above the 200 moving average here and targeting all the way to this swing low. This is not a pure price action, guys. This is how usually I trade, but let's not take this trade actually. And after this kind of huge momentum, you could have entered long position somewhere here. After this swing or after this chalk formation, you could have entered long position and you could have purely gained some kind of decent profit. But for better confluence, you could have kept your stop loss. Once if this 200 moving average broken towards the upside, you could have targeted all the way to this side. This is how you could have targeted. So that's it, guys. 1, 2, 3, 4 trade setups where you could have easily taken. Uh, I have taken this trade also, guys, and I have taken another this trade also. This momentum also I have captured. And you can see here also you could have plotted the fib levels here, the midpoint of this to this line. Once if this level has been broken impulsively towards the upside, you could have entered long position and tried your stop loss or to break even as long as the price is sustaining above these levels. That's how you could have traded on Bank Nifty, guys.